I know it has become a cliche, and it is a big claim that I made about this being the only video you need to become consistently profitable. But if you stick around till the end of the video, you will definitely have the tools to become a profitable trader. Let's start. The market does not always move in one direction. Even when it's trending, it makes small retracements in the opposite direction. Trend is your friend is a very famous quote in trading, but how to use a trending market in your favor. Because many times, when mostly beginners try to enter trade on a trending market, it makes retracement, and they get stopped out even when they were right about the trend. In this video, we will try to solve this problem, and we'll discuss where you should enter in a trending market so that you don't get stopped out, at least when you are right about the trend. So, without wasting any time, let's get straight into it. In this model, we use Fib retracement levels to predict the low of retracements and the start of the trend continuation. So, the ICT OTE model has these three retracement levels. The zone between 61.8 and 79.0 level is called Optimal Trade Zone, OTZ, while the middle of this zone, which is 70.5 level, is called the Optimal Trade Entry level. This level is where you place trade entries. To understand and apply OTE successfully, we need to master these 5 things. OTE is basically a trend continuation model. So, first of all, you will have to identify a trending market. And as an experienced trader, I will advise you to avoid the ranging markets. So, how will you identify a trending market? Let's discuss the bullish scenario. If the market is making continuous higher highs and higher lows, it means it is trending bullish. Similarly, if a market is continuously making lower lows and lower highs, it means that it is in a bearish trend. Next step is identifying the current range on which we will apply the Fib retracement. Here, what you have to do is look to the left and mark the most recent swing high and swing low. The range between these 2 points will be the range on which we will apply the Fib retracement. As we discussed earlier in the video, even when the market is trending, it does not move in one direction. It makes small retracements after every move in the trending direction. So, we will wait for the market to make the retracement and reach the optimal trading zone. Once the price reaches the OTZ, we can place our trade. It's up to you whether you want to use the start of the OTZ, which is 61.8 retracement level, or you use the OTE level, which is 70.5. If you use the OTZ start for entry, you will be able to enter the trade earlier and will not miss the trade that in some cases you might miss while waiting for the price to reach the 70.5 level. While if you use the 70.5 level, you will get a slightly better risk to reward ratio. I personally use the OTE level, which is 70.5. This step is also really crucial. A professional practice while managing a trade is to put a fixed stop loss and take profit level. For this model, use the low of the range as your stop loss. And for take profit level, you can use the high of the range, which will give you risk to reward of slightly more than 1 to 2, which can cover your spreads and commissions. And in the end, you will get around 1 to 2 risk to reward ratio. Now let's discuss the bearish scenario. You will be following all the above steps the same as the bullish scenario, but I will discuss them briefly here. First of all, we will identify the bearish market. Then mark the most recent swing high and swing low. Then wait for the market to make the retracement to OTE level. Once the price reaches the OTE level, enter a sell trade and put your stop loss at the previous range high and put your take profit level at the low of the previous range for a risk to reward ratio of just above 1 to 2. Benefits of using OTE. Since it is a trend continuation model, it also follows the saying, trend is your friend. I have also found that catching a trend is easier than a reversal. While trying to catch a reversal, you often get stopped out. It often doesn't go in drawdown mode, since we catch the trades during retracements and it is unlikely for the market to reach the previous low. So when we enter at OTE level, mostly the market immediately starts going in the trending direction. This strategy can give you a very good risk to reward ratio. As we enter at the 70.5% Fib level, we can easily get 1 to 2 when we reach the previous high. You can also target the higher risk to reward. Since it is the trending market, the price is likely to make higher highs. Another benefit of this strategy is that you have clear entry and exit level. Oftentimes, when a strategy does not have clear parameters for entering and exiting a trade, we as traders tend to mess things up. Sometimes we won't be able to enter at the right time, and sometimes we may close the trade too early or wait too long, and watch our profits turning to zero or even in loss. But with this strategy, we have clear entry and exit levels and less chance of us messing things up. Before continuing with this part, if you haven't watched the fair value gap or order block videos, I would recommend you to first watch them and then come back here. Using OTE with the confluence of order blocks and fair value gaps increases the win rate significantly. Using them together means that at the level of OTE, we should look for the order block or fair value gap. Let's say we are here and we have identified the range on which we are going to apply the OTE level. We will look to the left to find an FVG or order block at the level of 70.5 retracement. If we find either one of OB or FVG, it means we have more chances of that trade working out. It is really good to have FVG or OB at OTE level because they act as support levels, and most often than not, price respects them. Now, this is the topic that definitely needs a separate video. Hopefully, in the near future, I will make a video on it. But for now, I will explain it here shortly. Basically, the top-down approach means using multiple time frames and using the second time frame for more confirmation for entering a trade. Also, it helps us identify the market trend on lower time frame. For example, if the higher time frame is trending bullish, we will look for only bullish trades on lower time frames as well. I usually do day trading as the name of the channel suggests, so I will be using two time frames, 1 hour and 5 minutes. On 1 hour time frame, I will look for the overall trend and mark the range on which I will be using for drawing OTE level. Then, we will wait for the market to reach the 70.5 retracement level. When the market reaches that level, we will go to the 5-minute time frame and look for the market structure shift. On 5-minute chart, when the market will make a structure shift in the direction of the H1 trend, it will make it more clear that the market is now ready to continue going in the trending direction. So, when the structure shift happens, enter the trade and follow the stop loss and take profit targets, as I have described earlier. Now let's connect all the concepts we have discussed in this video and apply them combined. So, first of all, identify the trend of the market on H1 timeframe. Here you can see the market is trending bullish. Next, mark the most recent swing high and swing low so that we can identify the range to apply the OTE level. Next, draw the Fib retracement tool from the swing low to swing high. It should look like this. If there are other levels on your Fib retracement tool, click on the settings icon of the tool and in there, use these settings. Next we will wait for the market to retrace down and reach the 70.5 retracement level, which is the OTE level. Once the price reaches OTE level, go to the 5-minute time frame and wait for the market structure shift. After the structure shift, enter a buy trade. Now, if you want to be a little conservative and save about your stop loss level, you can put it at the low of the range on which the OTE is drawn on H1 time frame and set the take profit level at the high of the range or at 1 to 2 risk to reward. But if you want to target more profit and use a tighter stop loss, you can put your stop loss below the low of the 5-minute recent swing low. Since the structure shift has happened, the market will respect that low and will not go below there. And for the take profit level, you can stick to the high of the H1 range, on which we have drawn the OTE level. That's it from this video. This is the only trading model you need to become consistently profitable. Hope this was helpful. If it was, don't forget to like, share, and comment. If you want to learn more about trading, don't forget to subscribe. Now you can click here to watch the previous videos of the ICT series, or click here to watch the funded accounts available at the best price of the month. Thanks for watching and happy trading!